You're marking your structure in a wrong way, or at least not in the best way. Price in reality does not move like this. If you were experiencing a scenario like this, where you mark your structure and then it gets broken to continue in the same direction after, then you need this video to understand the right way to market structure. Forget about what you learned and learn it the right way. Make sure to share this video with your friends, like, and let's get into it. Now, starting with the most important point, and probably this is how you mark your structure. You're basically looking at highs and lows, and you're looking for strong highs and strong lows. Now, what does a strong low mean? A strong low is a low that needs to be protected, right? So let's say this low, it broke structure. Now it needs to be protected. So we're looking for this low not to be broken, and we're trusting this new range from here to here. And this time, okay, it worked. Now again, we broke structure here, then that's a strong low. Okay, it was working here. However, when looking at this, and this is the low probability market structure, this is what probably you're doing as of now, and it's really bad. Maybe it's gonna work sometimes, but then at specific times, especially where the market is gonna be ranging, you're gonna fall into this where there are a lot of breaker structure and then it gets broken, breaker structure gets broken. So you're gonna be in a miss of price action and in a miss of a market structure shift. It's gonna be, you're gonna go long, it's gonna go in the other direction. You're gonna go short, it's gonna go into the other direction. So it's gonna be a miss for sure. Now taking a look at this low. This low is actually a strong low also. Why? Because it broke structure. Now you're trusting this range as we see the pullback happening here from this high to this low. That's your range. Now let's say you take a fair value gap here and you enter from it, then price takes that low where you think that it's gonna be protected because it's a strong low, right? This is a low that caused another high, that caused a breaker structure. In your opinion, that's a strong low that needs not to be taken. And if it's taken, then that's a market structure shift. So we're going to be aiming into the other direction if it was taken. Now it gets taken here. What happened after? Now you have another range. So this is a market structure shift. You have another range from this high, where this high now is a strong high, and we have this weak low that needs to be taken. Okay, you got it here. Price started coming lower. Now we have what? This high again that caused the breaker structure, and then that's a strong high. This is a weak low that gets taken. We have a new range, and then we take this again, and you see that's a strong high, and again we can see that it's taken again. So two reasons here why this is a low probability market structure. Again, it could be working sometimes, but it's not going to be working all the times, and there is a much better way to actually mark your structure. Okay, so not this way. Now take a look at this. We moved from this big range to this small range where a lot of people will be considering this again as a strong high, but it's nothing but an internal structure. Breaker structure here, price goes lower, takes that high again. Now sometimes it moves into this market structure, but not every time. A lot of the time you see the strong low that causes this breaker structure is going to be taken in order to go higher. The real market structure is going to be like this: price going up, coming lower, going up, breaking structure, taking that low again, going up, making a low, taking it, going up. That's going to be the real market structure. So now why is this a low probability market structure? First of all, it doesn't take liquidity into account. We know that liquidity is actually the fuel of the market. In my opinion, it's the most important concepts to understand in the market. If you don't understand liquidity, reconsider what you're doing, because liquidity is the most important thing to understand. Liquidity is going to actually tell you how to mark your structure. It's going to tell you where price is going to. It's going to tell you where to enter from. It's going to tell you the bias. All of those things are what liquidity is telling you. Another thing, it's not taking into account how big the structure is, or how big the range is. So we're going to solve all of those problems into my way of marking the structures. And I'm not telling you here that, oh, you need to use my own way. Take a look at both. Go to the live chart, compare both of those ways of market structure, and see which one is more reliable, which one is working the best. And then you can take your decision. So this way is really a low probability way to mark your structure. It doesn't take into account the most important thing in the market, which price literally does every day and every second. Now again, why is it low probability? Because it doesn't take liquidity into account. You see price going up, we have this breaker structure, but then the low is taken. You're saying, okay, we have a breaker structure here. You're trusting this range and you're entering from a fair value gap here. You get stopped out here. Now you said, okay, actually that's a market structure shift. We have a new range from this high to this low. This high needs to be protected, but then because there is a liquidity above, there are a lot of people who are actually following this way, regardless of the liquidity, and they're actually creating liquidity above this high. And then what happened after? We have this market section shift, whatever you call it. We have this range from here to here. You enter from here, you get stopped out again, and the cycle repeats over and over. So you lost here, you lost here. Without understanding the liquidity, you're gonna be falling into this losing streak. And now again, you see, we have this breaker structure here. You say, oh, that's my range. Then we take the high again, and you say, okay, actually, we have a market section shift, trusting this range. The low is taken again. So you don't understand what a strong higher low is. It's, you're understanding incorrectly, totally incorrectly. Strong highs and lows are not just highs and lows that cause breaker structure. There is more into it, and that's what we're going to cover on the next slide. Now, before covering my way of the market structure, there's actually another way of the market structure, which is the ICT advanced market structure. I have a full video on this. This is still a valid way to mark your structure. But the problem with this is it's a little bit subjective. So it's not fully mechanical, it's subjective, and it's harder than the others. So ICT advanced market structure really working very nicely and it's reliable. However, you need more time to understand this, and sometimes you're gonna actually mark those incorrectly. So still reliable, but it's harder to understand. My way of market structure is much easier. Now, ICT, again, I have a full video on this. We have long-term highs and lows, we have intermediate term highs and lows, and we have the short-term highs and lows. This is what ICT advanced market structure is. Now into my way of marking the market structure. So that's the Mulham trading way. If you want to follow it, if you guys trust me, then follow this and you're going to see a big difference in marking your structure. It's not going to be, just a breaker structure. This is a strong low. No, because again, liquidity is the main thing of the market and we need to take that into account. How do we go with this? Let's start from here. As we're going up, what happened here? We have this range from this low, wherever it is the low, to this high. Everything inside is an internal range. Now, what happened here? We had a liquidity sweep. Now we have a breaker structure here. But now you ask yourself, before that breaker structure, was there a liquidity sweep? If the answer is yes, then that's your valid strong low, right? So a strong low needs to have a liquidity sweep, and then after that we need to have a breaker structure. So that's actually now your strong low, and then price goes up, we have this high. That's nothing but a buy side liquidity, right? So this is just a liquidity level. Price retraces lower, started to go up. Now your question is this actually a strong low? No. And what's the reason? Even though price retraces back into the range, started going up, and then broke structure. Now, in the other way of the market structure, they consider this as a strong low. But in reality, it's not even close to a strong low. Why? Because we're having this range from here to here, right? And there is no liquidity taken still. So I cannot consider this as a strong low. And why? Because it's actually a liquidity level. You guys know that my favorite liquidity level is when I have price going up, coming lower, going up, taking that low, going up, right? So I cannot consider that low, which is the same as this one, as a strong low, because I know that is going to be taken. However, the traditional way of marking the structure, that's what they do. If you follow this, then they're going to be liquidity for you, right? So this low, what a lot of people consider a strong low, it's actually a liquidity level for you in order to mark your structure. Now, again, breaker structure here, it doesn't really matter. As long as we did not take liquidity, we don't consider this as a strong low. Price going up, coming lower, going up, coming lower, and now we are going below this low. Now, what a lot of people would consider is this as a strong high because we have a breaker structure below. But what you see is really different. We have the strong low. So still, we are in a bullish market. We are in a bullish market structure. Price coming lower, taking this liquidity. And then now what do we look for? Again, a breaker structure or a market structure shift. In this case, it's a breaker structure because we are going into the same direction of the strong low. There you go. That's a high taken. That's a breaker structure. And that's a liquidity sweep, making this what? A strong low. That's the right way of marking your structure. Now, price is going up, right? We took also this liquidity level. We are not bearish until we broke below this point. Now, we could have an internal range or an internal market structure, but the main trend is still bullish until this one gets taken. Now, take a look at this. What happened here is price retracing lower into this range and going up again, taking the high. So you already entered your trade. and you got some profits. Now take a look at this. What happened here is price taking this liquidity level and then followed with what? A market session shift. That's your change in the direction. That's where actually this is an internal change, or it's an early indication that the change in the direction is happening. The change in the trend is actually starting. But the main one would be closing below this strong low, the previous one. That's your main one. And a lot of the time, if there is an internal change in direction here, this is going to be your liquidity level, right? This is going to be your main one. And combining this with market maker's model, this could be your original consolidation sometime. But you know, you have all of those liquidity levels to target first. Now take a look at this. What happened here is a market shift. Now, what do we have? The strong high and then all of those weak lows here. And price comes back to a fair value gap, started coming lower. We have another breakout section to the lower side. But still, that's not a strong high. This is not a strong high at all. Why? Because it did not take liquidity. So that's our strong high. Price continue lower. We have another mitigation here. And what happened here? As long as we still did not close below, we are still in an uptrend in overall, but then internally we're going lower. However, as soon as we create two strong highs, then it means that, okay, we're going lower. Now take a look at this. We have this first strong high, started coming lower, going up, no liquidity sweep here. But then we have a liquidity sweep here, followed by a breakout structure. Now it's confirming that actually we're going lower. And also we have a closure below this. So there's already a violation of our strong low that we had before. So that's already the main change in state of delivery or the main market section shift. Now take a look at this. We have this one and we have a creation of two strong highs. That's where we know that, okay, we are changing the direction for real. And then price create this strong high, followed by this breakout structure, targeting this low and all of those lows. So that's your way of marking the structure. What you need to do is look for a liquidity sweep followed by a breakout structure or a market section shift, and then you consider that as either a strong high or a strong low. And from there, you actually mark your range. You know what your range is. You go from there and you take any type of entry from those either imbalances or order blocks, or simply a turtle soup entry here. Because what is a turtle soup? It's a creation of a strong high or a strong low. You're taking a low, changes the delivery. So that's a strong low, right? So strong lows are made when there is a clear turtle soup. So this way of marking your structure, it takes into account the main thing in, or the most important thing in trading, which is liquidity. You're not going to be falling in that trap where, okay, we make a strong low and then suddenly it's taken. We make another strong high and then at the same time it's taken. So this is the best way to mark your structure. And I'll show you guys how to actually capitalize on this, how to take trades, how to make money of this. This is what I do every day. This is what I look for whenever I have a strong high created. Then, especially at the right time, then I would know what my bias is, because this is a manipulation, right? As soon as you know your manipulation, as soon as you see your Judah swing, then you know what the direction is. Judah swing happening here, I know we're pushing lower. Judah swing happening here, I know we're pushing higher. Because what is Judah swing? It's the AMD, it's the manipulation after the accumulation. So accumulation, manipulation, what come after? Distribution. So I know that, that's the direction. The direction is always opposite to the manipulation. So I'll show you guys how to capitalize on this. But please, if you don't understand this, rewatch the video again, rewatch especially this part, because I really want you to understand. We don't consider a strong high or low unless we have a sweep and then a breakout structure. A sweep and a breakout structure. And then a market structure shift, an internal one would be the first one, a creation of a strong high here, followed by a breakout structure. That's an internal one. And the main one is the closing below the previous strong low, right? And then also another way of looking at it, as soon as we make two strong highs, that means we're switching the direction. Now going over the rules again, just to make it clear, a strong high is a high that sweeps liquidity and breaks the structure. A strong low also the same. It's a low that sweeps liquidity and breaks the structure. So they're always the same. We're going to be looking at strong highs in a bearish market. So in a bearish market, we're going to be creating strong highs. In a bullish market, we're going to be creating strong lows. Now, a weak high, on the other hand, is a short-term high that occurs within a range and does not break structures. So in a structure, for example, as we're going lower, for example, we can see that this low did not break any structure. It was taken after that. So in a bullish structure, for example, as we're going up, we created this low. We did not break structure. That low is a short-term low, right? And the same thing. So short-term high is one within a range and does not break a structure. The same thing with the weak low. It's a short-term low that occurs within a range and does not break structure. Now, where do we consider, again, a market structure shift? A main market structure shift, it's a closing below or above a strong low or a high with a displacement. We have our main range, we have our strong highs and lows. Whenever we close above a strong high or a strong low with a displacement, that's a market structure shift. Now, an internal market structure shift is going to actually give us an indication of where the market might be actually switching the direction. So it's again an early indication. It's a creation of a strong high or maybe two in a bullish market, or a creation of a strong low or two in a bearish market. If you don't understand this part, then make sure to watch the previous part of the video because I explained that. Those are the rules, follow those, and we're gonna know how to actually capitalize on this and how to enter trades based on this. Now, this is a full trading plan, a full strategy using the market structure, just purely the market structure and any PD array that you're using. So again, within a range, what do we have? Our PD array metrics, right? 50% here. Above it, we have arrays, and below it, we have arrays. So what are the types of arrays that we're having? We could have, an order block, a breaker block, fair value gap, inversion, fair value gap, mitigation block, and a breaker block, right? So all of those things we could actually execute or look for those inside of our range. The first thing that we're going to be doing, identify. That's going to be the first thing, because no liquidity sweep, no trade. That's our rule. And no liquidity sweep, no strong high or low. There's no market structure without a liquidity sweep. That's what other people are missing. So we identify our liquidity sweep and then followed by a market structure shift or a breaker structure, creating what? A strong higher low. So now you can see prices going up, came lower, going up here, creating this short-term low. Liquidity sweep here, followed by a breaker structure. What does this create? A strong high. That's the first step of our trading plan. It's the identification of a strong higher low. You see, we created that strong high here. Now we know where our range is after the market shift. Our range is from here until we see a significant pullback or retracement. So we see price coming up here. Now we could take this from here to here. That's our range. So the second step is identifying the range from this high to this low where the retracement happened, and then enter either based on a liquidity sweep. So you could be looking for a liquidity sweep here, or just a PD array. So let's say you have a fair value gap that is above the 50%. In this case, because we're looking for a short opportunity, then it needs to be above the 50% of the range. When you see that fair value gap, you could enter from it targeting what? This low first, and that's gonna be your internal market makers model, where the smart money reversal happened here, or this one, or your main market makers model, where price is gonna actually, because the strong high would be your smart money reversal in this case. That's your low, that's gonna be your original consolidation, and that's your completion of market makers model. If you're not sure and you have no enough knowledge about market makers model, they're really game changer. Make sure to watch my full course about them. I have a full course. Take a look at the playlist. Now, price coming lower, entering of this fair value gap, going lower. Now another one, because now we know the direction is going lower. We already have the strong high. We are within this big range. You could again enter of this liquidity sweep here. And now what do we have here? Another creation of a strong high. So you could also wait for price to retrace here, going lower, because now we have this range. We're trusting this range. But if price pulls up a little bit, we have this range. We enter from this fair value gap. Why trusting this? Because now we already have this as a strong high. Strong highs are supposed not to be broken. It doesn't mean that they're not going to be broken because the market is not 100% perfect. However, we really trust those highs, right? Those strong highs, this should be respected in our way. Another entry could be if price doesn't take the main liquidity, goes up here, coming lower to take this liquidity. So we always look for what? The first step is the identification of a strong higher low, then identification of our range, then we look for our PD arrays within that range or any trading opportunity. We enter from there and we target our short-term highs and lows. or the previous range higher low, or an original consolidation if we are clearly in a market maker's model. So if all of this is nothing but, a PD array, we have a PD array here on the higher time frame, and it's nothing but like this. We have PD array here, we target this low, and it's gonna be mainly this low. So that's how we actually capitalize on the market structure. That's how we use it to make money. That's the real way to mark your market structure, and that's the real way to trade off that market structure. Now we go over the examples. I'll switch to trading view so we can actually take a look at all the opportunities and go over different pairs. Let's go. So I thought the first example could be going over the price action of EU on the 15 minutes for the past week. So that's, I'm not going to go and pick a specific price action that happened at a specific time. We could go 1 week prior to today and see what's happening. So now when it comes to marking the market structure, what we could do is we could start from any point, any significant point, and then follow, because a lot of the time people would say, oh, Mulham, where do we start? Because every point is important, right? But as soon as you see the last structure, you're going to understand what is happening. You don't want to start here and then determine that, okay, price is actually in a bullish market structure, for example. For example, I could start from a significant point that I see price was coming lower. I could start from here because this was Monday, we started going up. So I could start from here because it looks like we're in a bullish market here and then switch bearish, right? But without marking our structure, it's going to be, this is just in hindsight, we're seeing it like this. But now let's start, let's say from Monday. What we see here is, did we have a liquidity sweep? No, it was a failure swing here. We did not take the liquidity level. So we had simply, it could be this liquidity level taken here, but we had no major market structure. So we're still not identifying anything here. But then what do we have here is this liquidity sweep. And then was it followed by a market structure shift or a breakout structure? Yes, we have a breakout structure here. So now this is our first strong low to consider here. So we are actually pushing higher. Now, as we get a pullback, so let's say we get a pullback here, we're considering all those point of interest here, all those fair value gaps, considering them. And you see price came actually here. But let's follow our market structure. Not every time price will offer a fair value. Price did not retrace back into, and if you guys want to know why price was not able to retrace here, then make sure to watch my video about the fair value gaps and the third candle. It's going to be suggested now. So now taking a look at here, we had no pullback, price started coming lower, we had a pullback, we break structure. A lot of people would consider this now as a strong low. This is totally wrong. Now taking a look at this, what happened here? No sweep, actually equal low, so I cannot consider this as anything. We're still pushing higher, right? But we have a big range from this low and we're not finding any other strong low. Now you could actually go long from any of those. Any opportunity right now, you could go long because we're clearly in a bullish market structure. Now, what happened after is we did not take this liquidity, not taking here. But then what happened after is price actually retracing lower right here into a fair value gap. Did we take a major liquidity level? Actually, no. So we're not considering this, and even there was no breaker structure. So not considering this as a strong low, right? But then what happened after is price taking that low, there you go, and also taking this major low. What happened after? A breaker structure here. So that's now is our strong low, and now we have another push to the upside. Now I could actually take an entry because we have this creation of a strong low, right? After this bullish breaker structure, I could enter from this fair value gap, for example, where price actually retraced to. You see a sniper entry here. And why? Because we really have that bullish strong low here that was created after the breaker structure. That's when, you could use your OTE here. So OTE, I think price came to OTE here. Let's see if it does. So from this low all the way to the high, that's exactly where price reacted from, OTE. So OTE will be offered when we have this actually, a sweep, a creation of a strong low followed by a breaker structure. That's when it's going to happen. Now let's forget about this and see, we have the strong low. We're still continuing up. Now, what a lot of people would do is looking at this breaker structure and considering what? Considering this as a strong low. However, it's not. Why? Because it did not take a major liquidity. It was only a retracement into a fair value gap. Now, guys saying that, oh, Mulham, you say that fair value gaps are liquidity levels. And yes, but now when we mark in our market structure, we're focusing only on one time frame. Otherwise, we'll be confused. So only focus on this. This is our strong low. It's not this one. Price kept going up. Now you could take trades from anywhere in here. You could take this fair value gap here. As we're coming up, what happened after? So now we are clearly in a bullish market structure. Price started coming lower. Now this is our strong low. What happened after is we actually closed below this strong low. So what is this? A clear market structure shift. This strong low was supposed to be respected in order to go higher, but now it's disrespected. So now this actually tells us that we are pushing lower. Now we're switching the direction. So now we know that this is your real market structure shift. And where are we going now? Lower. So now we're switching from bullish to bearish. Now we are in a bearish market structure. That's your range where you could actually look for trades. Just curious to see what's happening on the market structure, right? You see price coming lower, started going up, no major liquidity sweep and no major breaker structure. Price coming lower here. We took this low. Was there a breaker structure? No. However, what we see here is taking this high. So that was a liquidity sweep here, followed by what? We can see a clear displacement to the lower side, price retracing higher. Still, with this move, the strong high is not confirmed until what? We close below this low or below this. This is an internal breaker structure, but the main one is here. This is a clear breaker structure telling us that what? Now we have this new range of this strong high. So we switch from just being or having the strong low and then strong high, the strong high, because if we actually consider this also, I just saw it. This as a liquidity sweep, manipulation here, and then a breaker structure to the lower side. So this is now also a strong high. This was our first one. A second one would be this one that was created now. So now our range would be going from this whole range, which is from here to here, to having this high as our protected high. This high should not be violated at all, right? So as we're coming lower, so you see we're coming lower, and now we have this range to trade at. We have this order block, we have those fair value gaps, and we can trade off them. You see, a trading opportunity would be taking a trade from this fair value gap. Very nice entry here going lower. Now let's take a look at this. Do we have another strong high formation that we can actually trust? What do you guys see here? There was no liquidity, or actually liquidity sweep here, but not followed by a breaker structure. But then what do we have here? Liquidity sweep. This is our range. So price came here, entered here. Now you could refine your trade more when you see another creation of a swing high or a strong high actually. So what happened here? Liquidity sweep followed by what? A breaker structure here, a minor one, and then main one here. So there's clearly a liquidity sweep followed by what? A breaker structure. Confirming what? A strong high, a new one. So this high should be protected. Very nice then. You see, as long as we are in a bearish market, you see this high was not taken, this high was not taken, and this high was not taken. Otherwise, if you were just going with this, as we're taking, breaker structure and taking the low in between, this could be taken and going up, and then you are gonna be confused about your market structure. You're gonna be saying, oh, is it going bullish or bearish? Because you have a sweep here thinking that this is a breaker structure. You have a breaker structure here, which is actually a sweep, and then you're getting confused. So this way of marking the market structure is the real way to go with. Now take a look at this. We started coming lower. This was our range until this low as we get a significant retracement. What is an entry point? Could be this order block, right? Or this big fair value gap, but we want to refine it. We're not going to blindly enter off those. Now take a look at this. We had what? This liquidity sweep, but it was not followed by a market structure shift or a breaker structure. What happened after? Do we have a creation of a new strong high? Actually, we have this liquidity sweep followed by what? A breaker structure, which does what? A new strong high. There you go. That's our new one. And you see, price started coming lower, creating nothing but this range that we could use to trade off. So you could be looking at this fair value gap, trade off it, which aligns with this breaker block, right? So that's your entry here. Now take a look at this again. Take a look at this. What a lot of people would consider here is that, okay, we actually created this low, we created this high, we created this low, and this low took this high, which means what? Oh, we actually have a strong low here that needs not to be taken. But that's totally wrong. We are still, based on my structure, based on the Mulham Trading Market Structure, we are still going lower, pushing up, only retracing to our bearish market structure to a PDR rate to go lower. Now, take a look at this. Do we have a new formation of a strong high? Take a look at this. We have a sweep followed by what? A breaker structure. That's literally after this breaker structure here. That's a confirmation that we have a new strong high. When you have a strong high, what do we have? A new range to trust. So I'm trusting this high to hold, and any range in between, I'm trusting it. And you see a clear fair value gap, holding price lower, price not even closing above the fair value gap. Started coming lower. Now take a look at this again. We have this. As we are into this range, we have another fair value gap here. That price again came to, started pushing lower. This was our main. Now we have this main strong high, right? On the other hand, what happened here is this low was taken, so we're still bearish, right? With the strong high. When we have this strong high taken, that means we have a main market structure shift. That's when we know, okay, the real trend is changing. However, what we see here is liquidity sweep taken and then followed by a displacement here. So that's what? That's an internal market structure. So we have an internal market structure, but still we could go in up, but we could be going up to where? To this range and react from it going lower, because that's our main range. That's an internal one. Until we actually make another major low, we're still not in a bullish market, but the main market structure is still bearish. Now take a look at this. What happened here is price breaking structure and then coming to this fair value gap and then going up. Now price is actually taking this liquidity level and failing to close above this. So there was no other low that is created here. But still, even if we create another low, as long as we are within this big range, we're still bearish. But even with this internal market structure, we could have had a trade here from this fair value gap going higher. We're still within this big range of going lower. Another example on gold, and this is on the daily time frame. So this is a confirmation that we can actually use this on any time frame. Now the same thing, the same question. Where do we start from? You could start from any point. I could start from here and then look at my market structure. I could start from here and look at it. But let's say that we could start from here. But I see a clear structure happening here. So we could actually start from here. Now, what is our rule for the strong highs and strong lows? It's basically looking at a sweep followed by a breaker structure, creating a swing high in this case. So we have this swing high, a strong high, right, where we broke structure. Now, any range after we have a retracement, we could look at it. So you see, price started to come lower, pull back, but we did not come to this fair value gap. After that, we pull back lower, but there was no strong high, not a new one. We started going higher, no liquidity sweep, and then again lower. So there was no entry of this point. If you took another type of entry, then yeah, you would be able to. Now, there's no new strong high until we do what? We take a liquidity and we break structure. You see what happened here? Taking this high and then breaking structure. So a new creation, we had this range from here to here. That was our range, right? Where we could look for shorts. Now we have a new range where we actually pulled up. We had a retracement, started to come lower, but in this retracement, we took liquidity clearly, and then we broke structure here. So you see, we started going lower. Now we had this point of interest here, entered form or any point of interest other than this one. But simply what we had here is a creation of a strong high. As we're coming lower, you see, we took this low, but then the question is, in order to validate this as a minor or internal market structure shift, as well as considering this as a strong low, we need to have a breaker structure. There was no breaker structure. It should have been above this point. We had nothing. So we are still, even though there was a pullback here, a retracement, but this is not a market structure shift. Let's ask this question. Did we take a liquidity and then a reverse? Yes, taking a look at this, we had this liquidity level taken here, and then no real breaker structure here. But then also taking a look at this, you could consider this, and you see price came to this fair value gap, started going lower. Now again, you see a liquidity sweep, and then what? a breakout structure. Considering this as what? We could consider this as a strong high as well as this one. Both are strong highs. Why? Because this one also sweep liquidity and then broke structure. This one also the same. It swept liquidity, broke structure. But we're gonna focus on this one, the last one. This is a strong high here. So in this dealing range, we could have looked for shorts. However, what happened after is price coming to this extreme POI. We don't know what's happening here, but basically liquidity sweep here. It took some time, but now if you switch to the high time frame, we're gonna see this as a very clear liquidity sweep. But you see, price came lower and went back to the range. So that's the liquidity sweep. But it would validate this as a strong low and then a market structure shift until we get a breaker structure. And you see, a breaker structure above this point, which is what? A strong high, which does what? That's a market structure shift. Now we created this strong low and now we are bullish. Simply, this dealing range here, that's where we look for long positions. So you see, we disrespected, violated the last strong high. Now this is a market structure shift. We also created this strong low. Now we are bullish. Now take a look at this. This was left open. There is another fair value gap here that aligned with what? A breaker block. So we could have entered from this one. This breaker block aligning with the fair value gap. That's where price comes to, started going up. Now, what do you see here? If we zoom in, we see that when price mitigating this fair value gap here, we had a liquidity sweep and price came back to the range. So that's a valid liquidity sweep. Was it followed by a breaker structure? Yes. Then what do we consider this? Now we're going to ignore this whole range and we're going to focus on the new range that we're having. So our strong low is this one. This is our new strong low. And now we're going up. So you see now this dealing range, if I take my fib and I could do the same every time from here, when the breaker structure happened, now this is a strong low, right? So I'm expecting this range to actually hold. And we created this high. And you see, where did price react from? Came to this order block and the OTE zone. So 79 to 61. This was the OTE zone. And price started going higher from here. That's how we trade based on the market structure. Confirming a strong low by a liquidity sweep and a breaker structure. Then we could enter from it. You see a very small fair value gap here, an order block here. We take an enter from there. Now the same thing. Now we had this strong low, right? We asked this question. Did we have a valid liquidity sweep and then followed by a breaker structure? You could look at this if you wanted as a liquidity sweep. This liquidity sweep and then a breaker structure here. So if you wanted, that's going to be actually another strong low because we had a liquidity sweep very clearly here and then breaking structure. So that's our new low, right? Strong low. So we're ignoring this for now. We are going into another range. Now, again, the same thing. We broke structure right here. Now take a look at this. Taking my fib from the low to the high. So price went here, did not retrace to discount, started going higher. Now take a look at this. Where did price react from? The first time is this one here. Now let me drag this a little bit to the left and take a look at this. This is how we actually identify our structure in the right way. We have a fair value gap here on discount at 70 and 79. This fair value gap here when I mark it, there you go. We can see that price came back to this fair value gap here. Now there was a liquidity sweep, which is this one. Price started going higher. Did we break structure? Not really. So we are not considering this as a strong low. Now we move on to this one. We had another sweep here with this low, swept here. Did we break structure? Not really. So again, that's still not a breaker structure. So that's not a strong low. Now another time we can see that we actually swept this again. And that was the final move. And if you guys know what a 3-drive pattern is, I've talked about it before. 3-drive pattern is when we have a fair value gap and price comes to it 3 times before flying. Okay. You see, that was the last sweep before price really going up and then breaking structure here. So what do we consider now? All of this was an internal range and the real strong low after price actually coming to this OTE going up. You could have capitalized on this one, entered here, started going up. You could have entered here too, small move, but this one was followed by an expansion. Now, what do we have here? Sweep of a low followed by a breaker structure, which is the main one here, because price did not retrace. So that's the real breakout structure. And that's where we actually now consider this as our new strong low. And that's as our new range. So we have a new range going up here. Now take a look at this. We had a new range going up, but no fair value gaps were filled. Price was just flying up. Now take a look at this again. We have nothing but weak highs here. All of those weak highs are taken. Now take a look. Price came to this fair value gap, started going higher, but then we have this liquidity sweep. So now we are actually, because this is a big range, we have a new small range. And then did we break structure? Yes. So now we are having this as our new strong low. However, in the future, if price decided to come again into the structure, I'm going to consider a minor or an internal market structure shift, because we still have this big major range here. So this one, if we close below, I'm going to consider this again as an internal. And the only reason is that we actually moved from a big range to a small range. So that's something that I don't like, unless we start flying up from here and then we create new ranges, right? So that's what I'm looking at here. We have this low taken, broke structure. I'm going to be looking at this new range here. So as we go up, I'm going to be looking for discounts below 50% in order to go higher. That's the one. So that's how we apply the market structure the right way. And this works on any time frame. So even if I go to the weekly, the monthly, it's going to be always the same. But then remember that the higher you go, the more accurate the structure is. The lower you go, you're going to see a lot of internal structure. So if you go bearish example here, this push to the upside where we create another strong high is going to be actually, it's going to have an internal bullish structure here, right? And then internal bearish structure here. You know, going to be always, it's always about the fractal of the market. Market is fractal. We can see a lot of things when we are in a higher time frame. We only see this. However, on the lower time frame, is going to be a lot of fractals here going on, right? So even a change in the delivery or market shift is going to be occurring here, even though on the higher time frame, it's nothing but a pullback. So this is always going to be happening. That's why I want you to focus on one time frame here. And do not forget to also apply your higher time frame analysis. Make sure that your market structure analysis is also aligning with your drawn liquidity and with your external to internal moves and the higher time frame moves. This was it for today. Hopefully you guys like this video. If you want another video going over trades using the market structure or going over more examples, let me know. But make sure to use this way and let me know what you think about it. Don't forget to hit the like, leave a comment, and share this video with your friends that might be needing help with market structure. This is Mulham, and I'll see you in the next video.